Good evening to all the participants. Good evening, sir. We welcome you all to the Futures and Option workshop. So here to conduct the workshop, we have Puratan Bhati, sir. I will welcome Puratan, sir, with some introduction. Professor Puratan Bhati is a consultant for the automotive sector and is also investment banker by profession. He also been a mentor for change for the flagship initiative for Niti Aayog, Atal Innovation Mission, promoting innovation and entrepreneurship since 2018. In addition, he also serves as a mentor and faculty member for various leading educational institutions across the country like IIT Bombay and Symbiosis College of Arts and Commerce. He also trains students and professionals in theoretical concept of investing like fundamental and technical analysis as well as financial modeling through his PFA Institute. Now I would request Puratan sir to start with the workshop. Thank you.
Thank you, ma'am. So good evening all. How are you participants? We have about 70 plus participants here in the workshop. And I'm assuming that most of you are aware of what a call and a put is. So just wanted to take a quick check on that you're all comfortable with call and put concepts. So we can start from there. So what do you think the Monday markets would be like? Let's see if we can get some inputs before we start. So how many of you are comfortable with the concept called open interest? Okay, so let's see how the markets have been while I wait for you some inputs. Hope the screen is visible. Let me know, dear participants, that the screen is visible. You can send your question through the Q&A session, which is also there. Okay, so yes, you are aware. Now, how does it look like? And could you, it is visible, perfect. So could you have built some strategy around this one? Is it possible to build a strategy so that we can trade on the option side of it? What strategies we can build? But before we do that, I think we should know how to read the open interest. So let me plot this on a different platform. The market is about 18,665. The ATM, I have pulled out 18,650 calls so that we can look at this. So this is the price of a 29th June, 18,650 call option. Now, whether you would buy this or not, a basic question to you, because understanding the trend is important. Will you buy this instrument? Or will you sell this instrument? Will you buy this instrument or will you sell this instrument? Let's see what inputs we have here. And okay, people are saying we will sell the instrument. Let us see why you would buy or why you would sell. All right, so do you see? And this is known as open interest. This data you see is known as open interest here, right here. So what is the meaning of open interest? Are you aware of what is open interest? And what does it indicate? Are you aware of this? What is the meaning of open interest? So let me explain you this. Let's see if there are some people probably who understand also. So I'll try and see the answers also if I can see. So you can chat through the chat box, don't worry. You can simply add your questions here. So what is open interest? So please understand that options, they are financial contracts, and every option, every financial contract will have two parties to it. There'll be two parties to a contract, someone who's buying it and someone who's selling it. So there'll be a buyer and there will be a seller. So there will be two parties to it. There'll be a buyer and a seller. and it is the same contract they are referring to. So if this is an option contract of 18,650 CE, you will have a buyer and you will have a seller. The opportunity with options is that you can short sell, and it may not be closed. So it is not closed like equities. If you short sell, it is closed by 3:30 p.m. But options are not closed. They remain outstanding. So if you create a position here, you can continue till the expiry, which could be, if it is a weekly expiry, you can continue this till Thursday. If you have short sold the position, you can again continue till weekly expiry, which is Thursday, whichever week you have chosen. However, that is not the case with shares. Equities, you will have to, if you have short sold, you have to close the position, you have to buy it, you have to square it off by 3:30 p.m. Now that means that you can continue to have an open position till Thursday. That also means that if you have bought but not sold, it will be considered as, if you have bought not sold, this will be considered as open interest, because the contract is not yet closed. It's not yet closed. If you have sold but not yet covered or not yet bought it, this will be considered as an open position. So you've sold it but not bought yet, this will be considered as an open interest position. So why does it become important to see the open interest is because open interest tells you where the crowd is, what people are buying, and they would also be interested in knowing what options they are selling. So we have plotted the open interest for you here right now. This is, and as you can see on the screen, let me show you the watermark also, so you can see what is this. So as you can see in the background, this is 18,650 call. This open interest represents that these many people are there. However, there is a common myth. People think that there are only buyers or there are only sellers. Please understand this number that you see, which is, I think, 14,59,000 number. Yeah, this is 14,59,000 number that you see here, which is this open interest for this particular call option. Since this is a financial contract, which is also known as options, so this is a financial contract, and it will have two legs. There are buyers and there are sellers. That means there are 49.59 lakh buyers, and because there cannot be a buyer without a seller, this is a zero-sum game. So there has to be seller, and there'll be equal number of 14,59,000 lakh sellers, because in an options game and anywhere you see this, any financial instrument, because the exchanges are only a place of trade, facilitating the trade. They don't buy themselves. It is just between the buyer and sellers. So the open interest, whether you look at the buy angle or whether you look at the sell angle, the open interest is only 49.59 lakhs. It is not double. So when anyone asks you what is the open interest or what is the OI, you will quote and you can quote 40,59,000. That means in this leg, there is both buyer and seller. Buyer of 14.59 lakhs and seller worth 14.59 lakhs. This is not volume. How is it different from volume? In a volume that you see here at this bottom of the chart, the buyers and sellers volume is added, and this is total traded quantity. But OI represents only buyer is equal to seller, and it will represent only one leg because it's a financial contract, so it does not get doubled. Right? When you sign a rent agreement, you have a buyer and you have a seller, or you have a tenant and you have a landlord, you are signing only one contract. Likewise, because the contract is not closed yet, you have buyers on one leg, sellers on the other leg, and this is equal to 4.59 lakhs. Now, if the number of buyers and sellers are equal, how would I know that there are buyers, or how would I know that there are sellers? How do I know? If that information is already there and the buyers and sellers are equal, then how do I make my position is a question that I'll ask you. So how? Yes, it is a number of, and I can now read your inputs also, number of option contracts not settled yet. So how would you know that this is, this is something that I need to sell, or that is something I need to buy? If the number of buyers and sellers are equal, how do I know that this is something that I need to buy or sell? For that, you will use an instrument or an indicator, price action. So how do I know that this is actually selling? So you'll use an indicator which is published by NSE, and this is not an indicator for them. This is a data point for them. So they publish VWAP for stocks, for Nifty, for Bank Nifty, for all the indices. It's a data point like a volume, price. These are data points for the exchange: price, volume, turnover, etc., etc. So likewise, VWAP is a data point for them, and we consider it as a VWAP as an indicator, but this is actually a data point for them. And all indicators are in fact data points. So if you look at the VWAP price, you will see that this is below the VWAP price. Do you notice this? Do you notice that it is below VWAP? Can you all confirm, please? Yes. So now, if anything, what is VWAP? The question is, what is VWAP? So it is volume weighted average price. What is this price? This is average price. So if your actual price is above, and this is anything like moving average, right? So I'm sure all of you are aware of simple moving average, exponential moving average. So VWAP is a kind of average, but it is multiplied by the volume. It takes the weight from the volume. So for every price, they multiply the weight or the volume. Whatever transaction took place at that level, what was the volume? They multiply price 1, price 2, price 3. They multiply it by weight 3, which is volume. So for every price point, what was the trade? And when you sum this up, this whole total, and divide it by the total of the volume, you get the average price. This is weighted by, this price is weighted by average, and that is known as VWAP, which is nothing but like a moving average, but it is multiplied by the volume. So if anything, if the actual price is below the VWAP or the average price, is that a good sign? Is that a bullish sign, or is that a bearish sign? Is that a bullish sign, or is that a bearish sign? That's a bearish sign. Anything which is selling below the average price is a bearish sign. So now we have two pieces of information: open interest plus the price which is going downward. And so if you look at this action, what has happened is, so if, say in this case, the OI is moving down, the open interest is going down, and the prices are also going down, will you buy this one or will you short this one? What is happening here? What is happening here? The prices are moving down and the open positions are also, open contracts are going down. So what is happening? So some are saying short covering, some are saying short. The OI is going down and the price is going down. This is long unwinding. Yes, people are exiting their position. Yes. So what, let us then revisit this because I'm getting mixed mixed responses. So whenever the OI increases, that means people are building position. Okay. People are doing this. Yes, this is long unwinding. But whenever the OI goes up, that means people are building the position. Think of as a bus and people are entering that bus. Now, whether they are buyers or whether they are short sellers, that is not, that we have not figured out. But these guys are getting into the bus. Would you want to be facing the people when they are getting into the local train or the metro or the bus? Do you want to be against them, standing against them? When people are entering into the bus or the metro, you don't want to be against them. So first of all, you have to know that, okay, OI is building, that means fresh positions are being created. Now, who's creating this position? Whether the buyers are creating more aggressively or sellers are creating more aggressively. For that, you will refer to price. So price becomes a reference. On the other hand, if the OI is going down, in a common language, in a common analogy, just assume that people are exiting out of the bus. When people are exiting out of the bus, that means people are closing their positions. Would you want to create a fresh position here? Would you want to create a fresh position when people are exiting out of this trade? Never, right? So when OI goes up, you would want to create a position. Your interest is to create a position. When the OI is going down, your interest is not to create the position. Otherwise, you'll get into a trap. Okay, when the OI is going down. Is this clear up till this point in time? Now, which side to create a position is a question that will remain. Okay. So which side to create a position will always remain. So for that, we will mix another piece of information, which is known as price information. So OI is going up and the price is also going up. Are people buying or selling? So most of you are saying that there is a buying happening. So we'll look at some examples also. Yes, in this case, this is buying happening for CE. So you'll have to check what is being bought, whether it is a CE or a PE. And in this case, as you can see in the background, the CE is being bought. Very nice. So we are in sync till this point in time. And we'll see how to build strategies around. And we'll see how to, why the buildup will be happening. Now, if the OI is going down, say the OI is going up, still going up, but the price is moving down. What is happening here? Is it a long buildup or is it a short buildup? What do you think, guys? Yes, and the correct answer is that there is short buildup which is happening. So it's a short buildup which is happening. It's not a long buildup. It's a short buildup which is happening. Good. So obviously you would want to short this instrument, whichever instrument is this. Now let's see, let's take it further. OI is going down and price is going down. OI is going down and price is going down. What do you think is happening here? So is it a long buildup? Is it a short buildup? Is it a long unwinding bull liquidation? Okay. Or is it a short covering? So if OI is going down and price is going down, this is long unwinding. In a short covering, the prices will go up. So we will also check that. Don't worry, we'll come to that. So the correct answer is long unwinding. But what do I do with this information? How do I build my information around it? So that is a question that we'll ask. Now, say the OI is going up, but the price is moving. The OI is going down, but the price is moving up. What is happening here? People are closing their position, but why is the price going up? People are closing position. And I think now everyone understands that this is short covering happening. Okay, having understood this, now when you see the OI going up, the prices also going up, can we say that this is long unwinding happening? This is a long unwinding, can I say this? Now that long unwinding, if the OI is going up, going down, and the price is going down, what would you call this? Is this not long unwinding? What is this? This is certainly long unwinding. Everyone is saying this is long unwinding. So this is long unwinding that is happening. So people who had bought in the morning in the first half are now unwinding it. That is means they are selling it. Can we make use of these information? Let's see if we can. You can use the chat box now, I think, which is allowed. So instead of putting it in the Q&A section, you can simply put in the chat box. So how does it give us an overview? If you understand all of this, so how do I? So how many of you are checking OI spot? How many of you are checking OI spot on a daily basis? Are you checking this? How will you make your strategy for Monday? How do I know where markets are headed? What should be my playground? Should I carry a bullish view? Should I carry a bearish view? What view do you carry for Monday? Do you carry a bullish view or a bearish view? Let's see how many of you carry the bullish view, how many of you carry the bearish view. Now, do you also realize that the option chain has become a trap for retailers? Do you also realize this? If we know how to read all this, if it were so simple, then why people are not making money using this? Will you agree to this statement? Correct? Change in OI and SGX Nifty, am I right? Those you will definitely check. Yes, Arvindji, that you will definitely check. But what else will you check? How will you understand that, why retailers are not able to make use of this one, right? Retailers are not able to make use of this one because this data, someone also mentioned option chain, it is changing every 3 minutes now. So the data from the NSE is available with a free data is available with a gap of 3 minutes. All of this data is changing every 3 minutes. And so it is like seeing the open interest on a minute-to-minute basis or every 3-minute basis. So it is difficult to understand it. But there is one exercise that I'm going to teach you, which will make your life easier. And this is what rise in OI and rise in price. I want to know. So what is this? Does it tell me what has been bought? Does this tell me buy signal or a sell signal? Whatever has been bought, is it a buy signal here or is it a sell signal? Majority of the people are not able to make money using the open interest. Watching open interest is important. Yes, absolutely it is important. Can you ignore it? Absolutely not. Can you trade basis that? Not necessary. So we tell you trading strategies, how to use open interest, and here is one introduction to it as to how you can develop your open trading strategies around this one. We tell about close to 10-15 various kinds of option trading strategies for various breakout strategies, breakdown strategies. You have bullish strategies, bearish strategies, volatile strategies, neutral strategies. You have for earnings. You have strategies for consolidation. There are tons of strategies around. So let's see. This is in line of one of the strategies. This is Nifty. This is what has been bought in the market. So first of all, I'll remove the July data because that is too far. This is what I have. I have few call options also. So if I want to check what has been bought, let's see. So the call options, and this is as of 2406. Okay. So what has been bought? Let's just check. And what is the quantity? So 1,47,114 C has been bought, calls have been bought. Now these are really out of the money. Do you notice this? 20,000, 19,900, 20,100, 20,350, 20,000. Do you know, and where is our market? Close to this level. Would you agree? Then why people are buying 20,000 and 19,000? Any thoughts around it? Why they are buying this? The call price of this one is, the price is cheap, but will it ever go there? What if it does not go there then? Okay, so a lot of you are saying that this is for hedging purpose, but how do you know what is hedging? Can only institutions hedge? Can retailers hedge also? Can retailers hedge? Do the hedging strategies? Yes, and those are better ways. No, they can absolutely do that. We are doing that on a daily basis, and we are teaching this on a daily basis how to hedge the positions and make money out of it. So hedging is for risk management, but also for money making. So definitely you can do this, and you can do this on a daily basis with various instruments, and there are about 10 or 15 strategies that you can implement. So if you are looking at 20,000 and 19,000 buying, this is definitely not for normal volatility. Only when you have very high volatility, then you will make money on these. So these are part of volatility strategies, but also used for hedging. So only once you understand what is a volatility strategy, how can this be implemented by a retailer, and how can you implement this as a hedging strategy. We also have an input from Mani Kumarji saying VIX is low. Yes, when VIX is low, VIX is an index, so please do not confuse VIX with IV. It also means IV is low, and when IV is low, people buy it. When IV is high, people sell it. But we are not talking about those right now, because there is a mean reversion and we track IVP and IV rank. So I will come to those later if time permits. So don't worry about these right now. All I am saying is, why would people buy 20,000? Will you go and buy a 20,100 call option? Let me check with you. If you were to give given an option, and even if it was so cheap, 1.55, will you buy a 20,000? How many of us have bought 20,000 call 100 options? So most of the retailers, as I can see, they have not bought it. But there is a purpose behind doing this, and we can also start looking at these. We can also buy, right? So since these are all OTM calls, and these are part of some hedging strategies which you can understand once you get trained on these, and it is possible for you to implement. These are better way of making money or keeping the risk under control. These strategies, the hedging strategies as they are called, are simple and won't give you heart attack. Most of the people who are trying to do CEPE one-sided are momentum traders. That means they are always on the look for some opportunity. That means also you're also under pressure all the times. And if you are, because if you miss those 5-10 minutes, you have lost the momentum. And if you are in office, obviously you cannot attempt. So I am ignoring this piece of data because these are OTM and far OTMs. So I will ignore this. And all of you can learn to trade this without much pressure and much frustration, because India is moving towards hedging strategies. All the retailers are moving towards hedging strategies. So we will have to focus on hedging strategies. Now I come to put, now are these closer to where my markets are? Can you confirm that these are very close to where the markets are? Your market is close to 18,656. Can all of you confirm please that this is close to the markets? This is almost around the ATM. That means I should be looking at it. Now let me take a reading of this one, and I will put a comma here so we can read it better. I will remove all of this. Take a reading one more time. 6,18,171 puts bought. 6,18,000 puts bought. So you have OTM calls. What are OTM calls? So say if you are 18,650 levels, but you buy 19,000 CE, 20,000 CE, where the intrinsic value is 0. Will you all agree that the intrinsic value is 0 for these OTMs? If the intrinsic value is 0, that means the only value that you are focusing on is extrinsic value. That also means that you are focusing on something which is known as time value. And you know that time value gets impacted by a factor known as volatility. If you have not read all of this, we teach all of this in our classes. So ATM and OTM intrinsic value is 0. Deepika ji, let me correct you slightly. ATM has about 72, it depends, sometimes 70%, sometimes 90%, but generally 70% time value and some intrinsic value. You can check this, download this and check the data. We have validated this many times, right? Out of the money had 100% time value. All right, so that means, will you agree that if there is only time value in these ones, if there is time value in these ones, that means the volatility is something that will, volatility is something which is required to make money on this one. If you don't understand all these terms, in simple terms, for markets to jump from 18,650 to 20,000, would you need volatility, or can it just simply go there without volatility? To jump up to that level, will it need volatility? Yes or no? Yes. So if it needs volatility, that means a concept called IV becomes very important. It becomes very, very important. Now I'll say that yes, IV becomes, or volatility becomes very important. Now you'll say, I have never read about implied volatility. I have never heard about it. These are complex terms, so I cannot make money. Money making is a different concept. Being theoretically sound is a different concept. We have had people from very humble backgrounds who are not educated but who understand markets. So anyone can make money in the markets. Whether you can talk the lingo or not, that is a different thing. But understanding, it'll be better if you're theoretically sound and you make money. Better to understand. But there are people, there are examples, many examples across India who don't understand this, but because they have read and understood this, They are not so far educated that much, but they can still make money. So there is a possibility that you'll make money without going through a formal education. But if you understood this formally, that also helps. It helps majority of the people. And after understand making money, all these people come and take the classes, so they also understand. So what is implied volatility is a question. I just simply wrote IV. In this IV, there are two words. One is implied and one is V, which is volatile. Implied means has two meanings. One is derived and second is expected. So what is the expected or future volatility is something that you would focus on. So we train people on reading future volatility. How to read this is very, very important. So one thing is clear that if you have bought a call option of 20,000 C, 19,000 C, you will not make money until and unless there is volatility. Until and unless there is a volatility on it, you will not make money. So, and if the volatility does not come, if there is an absence of volatility till Thursday, you will lose money because of a feature known as theta decay, which is simply expiry. Because it is going towards expiry, the product is decaying. If you buy a bread and if you get closer to the expiry, does it start getting bad? Does it start losing its internal value, internal worth, the bread, if it gets closer to the expiry? And if you are closer to the expiry, the bread would decay faster. So these call options, if it does not reach 19,000, these will decay at a faster rate. So towards the expiry, like a bread, like a milk product, towards the expiry, the product decays very fast. This is known as theta decay. So if there is no volatility which comes, that means you will lose all your money that you put. That means volatility becomes an important concept for these guys who are buying out of the money. There is no internal worth in it. It is all 100% time value, these kind of things. So what is the objective of these people? The objective of these people who are buying, say 18,000 put 100, they are all buyers, by the way. 18,500 put, they are all buyers. 18,450 put, they are all buyers. Why are they buying it is a question. So to understand why they are buying it, let us also understand how they are buying it. So someone has bought, and let me zoom this in for you. So someone has bought 1,61,000, highest number at 700. Someone has bought 1,33,000, and someone has bought 1,20,000. Okay, do you see this? That means people want the markets to remain below this level. People want the markets to remain below these levels, and people want the markets to remain below because these have been bought. How do I know that these have been bought? It is rise in OI and rise in price. The price is rising, OI is rising, and the price is also rising. That combination comes with only a long buildup. So people are buying this. So this is one way to assess how many puts have been bought, 6.18 lakhs. That means they're expecting to go down below various levels. There is one more way to develop an understanding around this one. But also let me hang on, just tell me, if you thought this was so simple, let me also tell you the trap around. Just hang around and you'll see what I'm trying to. So then we investigate if this is the movie, for example, if people are standing in this, say, auditorium one, this is say movie, it is playing. This is maybe auditorium, you are in a PVR and this is say auditorium 2. We also would like to know which movie now, after seeing this movie, where they are moving. So you would also like to see the percentage change where it is highest, 199%, 118%. So after this, the crowd is moving. Maybe it is a PVR example, or maybe it is a local Mela example. In your city, people after watching this show, they are moving to this one. And after watching this show, they are moving to this one. So which are those two big numbers? Let's highlight them. 18,650 and 18,450. So this is where people are also moving. What is the meaning of this one? How do I interpret this? If this is your playground, if this is your football ground, your resistance, the width of the playground is 18,700. You have goal, players is standing at 18,650. You have players standing at 18,500, 600, and 600 and 500 levels. They would want to kick it in this direction. They want to kick in this direction, so it falls. But it is market. It does not behave like what we think. Sentiment change happens during the day, especially in the second half around 2:30. So if market goes above this level, if the goalkeeper here or the player here picks in a very strong movement and if these levels are breached, that means the message that you have to take away is that sentiment is changing. Now, when does the sentiment change? There are two time frames where the sentiment change. One is between 9:15 and 10 o'clock. And the second time frame is anywhere between 12:30 to 2:30 p.m. The sentiment largely changes. So you have to see whether it remains above this level or whether it goes below this level. But this is only half of the story, what has been bought, and we don't know what has been sold yet. So we will look at the other side of the game and we'll see what has been sold. This is one side of the players that you have seen, that they are standing at these levels. Where is the second game being played and how do I avoid trap? Then comes the practical wisdom around it. So I will be talking about the practical wisdom now. So here it is, rise in Y and slide in price. Can you all confirm what sort of data is this? Is this a buy thing, sell thing, short covering, unwinding? Let's see what you see, what you say. What is this data point? Is this selling, short build-up? All of you can confirm? Okay. Now let's see the magic here. First, let me complete the data sheet and let's see the magic here. So here it is. This is short selling, short build-up, all of 29th June. There are calls and puts. So I'll first look at the calls. What is the volume here? Sorry, what is the open interest here? 13,27,000 at various levels. Let's look at these numbers. So they have, again, they want these because they are call sellers. They want the numbers to go below. So we have a common number here, 18,700. You have also a number like 18,800. They are all people who want the markets to fall below this level because this is C that has been short or written. So they want the markets to be below these levels. Look at some important numbers. 18,750, 19,100 and 19,000. Those are the numbers also. But this is the number which repeats twice, both on the put side of it and both on the call side of it. This is a number which repeats on both sides. And all these players want the markets to fall in this direction, go downside. Are there any players who want to kick on the other side of it? So these are the guys who have shorted put, and there are two guys who have shorted put. So 18,400 and 18,000 levels. They are kicking in this direction. They want the Nifty to rise. And these guys want Nifty to fall. Now this is pretty obvious. 18,400 will act as a support. So, but people say this data is not reliable because when I open the market, it does not behave like this. It is not like that. These are important numbers that you have to take to your trading desk These are very important numbers. If it is crossing on the upside of it, that means these guys have become powerful. They have kicked a shot in this side and sentiment has changed. That is point number one, but that is only half of the story. So please listen to this very carefully. Likewise, if it is falling this side, which is part of the sentiment one only, part B of it, if it is falling below 18,400 and falling below 18,800, that means it is getting even more bearish and you cannot have a bullish view on this. This is sentiment one, part B. But what is the practical wisdom out of it? Okay, so let's look at this one. What is the practical wisdom? So we have calls which have been written, or this is short sold. So listen to this carefully. We have puts which have been written or short sold, and we have puts that have been bought. So let's look at this. What are the numbers again? I would need the numbers again. So puts written 2.57 lakh contracts. Okay. What about the call shorted? 13.27 lakh contracts sold on the call side of it. What about the put bought? So this was the put bought thing, and it is 6.1817. So let me write it here. The put bought is 6.18 lakhs. Now look at the practical aspect of this. Most of us miss. So there are 2-3 different kind of transactions here. Call written and put bought, they are part of the same transaction. Will you agree that they are on the sell side of it? They have they carry a bearish sentiment. Will you agree to this statement? So what is the sentiment, total sentiment on the bearish side of it? This is close to 20 lakhs. Okay, let's look at this one. So Monday morning, what can you expect? Let's see. So if calls have been written, right, how will you close the transaction? You will close the transaction by buying it. Is that point clear? How will you square it off? So you will buy it. When you buy it, the Nifty will start moving upwards. Correct? Because when you are buying the calls, the prices will go up. Essentially, Nifty has to move up. Otherwise, the call prices will never move up. So in this case, the Nifty will move up. When you have puts bought, okay, when you sell it, the put prices will go down. Put prices will go down, correct? That means for put prices to go down, Nifty has to move up. Will you agree? Yes or no? And the third part of the transaction is when you have shorted the puts, so how will you square it off? You will square it off by buying this put, correct? But when you buy the puts, will the prices of the put go up? That means Nifty will go down. That means on Monday, you can expect both Nifty to go up and Nifty to go down. But which will happen first? Whether Nifty will first go up or whether Nifty will go down. So ideally what you have been taught, say if I have bought something on a weekend, which is Friday, this will undergo theta decay, correct? It will lose value. 2 days there is no volatility. 2 days there is no volatility, correct? But time is running out. Do you agree, yes or no? That means there will be theta decay, concept which you will learn in your advanced classes or intermediate classes. That means who has bought first, the put buyers would like to sell first on Monday. That means Nifty will go down. First, because the buyers lose value over the weekends. They will lose value. So obviously they would want to, close it first. And when the put buyers close it first, which is this piece of the data sheet, the put buyers, when they sell it, when put buyer is selling it, and it would lose more value if the short sellers hold it till 12:30 p.m. Ideally they should cover it on Monday at 12:30 p.m. Ideally they should do that, because they would have lost more value. And obviously as a short seller or a writer, you want the prices to decline as much as possible. So you would have shorted, you would have held till 12:30 p.m. so that Nifty can when they start buying this, the put prices will go up. The put prices will go up. That means Nifty will go down. So we tried, and so that means either of these combination, whichever they do, Nifty should go first up, and then possibly Nifty should go down. Any of these combinations can happen. So we tried and made strategies around it, but it is not very clear. We lost money also, so it is not very clear. One thing that came out from here is that Nifty will make a high, in the sense it will high of the day, and Nifty will also make a low during the day, because the call sellers, the put, so you have call buyers, you have call sellers, and you have put buyers. You have both these guys. So when call buyer becomes a seller, the market will go down. When a call seller sells, when he buys, the Nifty will move up. And when a put buyer sells, Nifty will move up. So there are cases, but this is not very clear as to when they will be. So don't be under a trap reading this data and thinking, wow, 20 lakh worth of bearish sentiment is on this sheet. Hence, the moment you open the market on Monday, you will buy a put and then expect to make money. This is where the retailers are getting trapped. This is, you have to understand, those who have a bearish sentiment will square off their position by buying it, and this will turn bullish. Those who are bullish, they will square off their positions by converting into selling it, and this sentiment will turn bearish. So you'll have to wait. So Monday, please wait till 12:30 p.m. to be able to understand which side the game is happening, whether it is happening on the buy side of it or whether it is happening on the sell side of it. If you just simply open it 9:15 a.m. and buy either a P or a C, you are thinking that this will go down further, hence buy a P. Someone is thinking it has corrected already significantly. Then you may sell. You may just buy a call instrument. However, it is not very clear when the DIIs and the prop desk guys, because we also train prop desk guys, when they come back to their trading desk, which order they will punch first is definitely not known at 9:15 or 9:16 a.m. So be very, very careful. The OI has been becoming a trap for the retailers, is what I have seen. They've been reading data. This is Friday 3:30 p.m. closing data, which is not a valid data. So please be careful. Have you understood this? But there are trading strategies that can be made. So by 12:30, you will have three pieces of information. One is the high or low of this day, and you'll have a high plus a low of the previous day. Mix this piece of information and you can make a very good strategy around this one. This is a very, very good strategy which you can make around this one. So please take note of this one. Use this data for understanding this, because OI data is changing every 5 minutes. We have advanced, I have got very advanced tools also where we read this changing every 5 minutes, but you will be very, very careful about this. Now tell me one question to you. What strategy will you implement at these levels of Nifty? What level of what strategy would you implement? So Monday, watch out. First of all, watch out this on a small time frame, which is a 5-minute time frame. Please watch this out and see by 12:30 you'll have 3 pieces of, more or less we have 3 pieces of information available. Especially Mondays, you got to be very careful. There are trading strategies made for Monday. There are trading strategies made for Wednesdays and Thursdays. There are trading strategies for now there'll be Friday also. There are trading strategies for Tuesday also. So now a basic question to you, that what strategy would you implement? Seeing this chart, what strategy would you implement? If I go and sell, for example, from 2% from here, 2% OTM from here, will this help me in making money? I will go for bull put spread and with small amount of risk. Okay. So the question has two foundations. At the strong support and resistance level, are you all comfortable with resistance and support levels? I am guess if you're part of the FNO lecture, you're all very, very comfortable with support and resistance level. So if there is a very strong support and resistance level, which strategy to implement? Very, very strong support and resistance. For that, you'll have to answer this question. Do you think this is a strong resistance level? Is this acting as a strong resistance? Yes or no? Okay, it is acting, certainly acting. So which strategy would you implement here? So I've got various options: sell, call, and put both, bear put, neutral, etc., etc., and no idea about strategies. So there are various inputs which have come. First of all, those who are saying that let us implement neutral strategies, please understand Nifty has already fallen close to 1.38% or more from the top, from the high level. From the highest point, this has already corrected 1.38, and 1.38% on Nifty in 2 days means 0.5% daily or 0.6% daily, which is like a gap up having 2 days gap up. So, and anyways, you have seen slight gap up here, slight gap up, gap down here and gap down here. So volatile strategies are not for gap downs or gap ups. That means, the neutral strategies are not for start giving losses if there is a gap up or gap down. What is a neutral strategy? For those who don't understand, neutral strategy means market does not anywhere. It's a range bound situation. So you will definitely not implement this. You will implement volatile strategies or volatility strategies, which will help you in making money, because either it can break out this one or break down this side. If it's a breakout thing, you can implement this generally your break evens in such strategies is close to 1%. So if it has fallen more than 1% from here, you are very happy. This has fallen close to 1.40%, and you are very happy with the 0.5% return that you have made on it. So at very strong and support resistance level, you won't do this. You can also maybe sell OTMs 2% from here. So if it goes 2% above, you may try to make some money. That is possible. Or you can try some calendar spreads or something. But right now at these levels, I can think of nothing other than straddle, which is something like this. So in fact, you are going long on the straddle, which is a volatile strategy like a V shape, V for victory, V for volatility. If you sell the straddle, which is the inverted V, it's a neutral strategy. And please don't try this. This is very, very risky. In fact, you have to try strategies which have wings on both sides. That means the losses are protected. So this is what you can do. And if you may try this some other bearish strategy, but no bullish strategy. As I read some comment here, this is not a bullish movement. This is on the bearish side of it. So there are some bearish strategies, but you would certainly want to experiment. So when can you implement volatile strategies? You can implement volatile strategies or volatility strategies before RBI announcements, before Fed announcements, before stock earnings. And if you have heard it correctly, I said before, and yes, you heard it right. I did not say on the same day. You would not implement this on the same day, because by that time, volatility would have already spiked up. So we also track volatility and see whether the volatility has spiked up or not. There are many tools that we see. So from price action, those who are simply doing price action and trying to make money, it's slightly difficult because of high frequency trades, latency problems. So the game is now changing, and game has already changed. And this remains one of the most important concepts. So you'll have to master the art of reading IVs, IVP, IVR. If there is a spike up in the volatility, so the volatility, you'll see there are many firms in Delhi and Mumbai which are shorting IVs. What does that mean? They're selling volatility strategies once it has picked up, like this one. So if you see, so I was interviewing for my firm and I came across people who said, sir, we sell IVs only. So IV guys don't look at the price action purely, and they are not scared because you have a band of 200 points. If Nifty, or rather a 400-point band, that means what? If Nifty remains in a 400-point range, say you have bought 18,650. If it goes to 18,850, you will not make loss till 18,850. If it goes down to 18,450, you may not still make loss. So if a huge band of 450, you simply sit and enjoy the game. If you are a short seller, you operate in a band. As a buyer, pure CE and PE buyer, you operate in a very thin band. You are delta or exposed. That means 1 rupee goes up, 1 point Nifty goes up, it impacts you. 1 point Nifty goes down, it impacts you. You are playing in a 1 rupee band. But here, when you do these strategies, when you learn these strategies, you are operating in a 400 point, 200 points, both sides, on the upside, on the lower side. So some people short IVs when the IV has picked up, they short it. There are strategies around, neutral strategies, which you will short. And when IV is rising, you will focus on volatility strategies. So the game has changed, and game is changing from price action. So please take note of this. The game has changed. There is a common myth that IV is equal to India VIX, which is not correct. That statement is not correct. India VIX is derived from IV. from? So India VIX is derived from IVs. And how it is derived? So if you go to the NSE website, they give you the formula and stuff. But this is an index. This is not IV. India VIX comes from IV. So IV gives you India VIX. There's a formula which I teach, not for a webinar perspective. So it comes from India VIX. So you have to start tracking India VIX. But India VIX generally has an inverse relationship with Nifty. IV has no relationship. Or volatility has no relationship. That means if Nifty moves up, IV may increase. If Nifty moves up, IV may increase. If Nifty falls down, IV may increase. It has no relationship with the direction. India VIX is directional. It's an index. There are anomalies, so we have strategies also for when India VIX varies, when there is a divergence on India VIX versus Nifty, you will see that there are strategies also for that. So you can make your strategies basis earning days, announcement days, breakout strategies you can make, and not simply buying CE or PE. It will be a combination of CE and PE, or CE and CE, PE and PE, or any of these combinations. So this era is never there. The reason options were devised was so that you have two legs, leg one and leg two. In one leg you can have a C or a P, in the other leg you can have a C and a P, any combination. There are a lot of strategies around. So there are breakout strategies, there are strategies for a dividend, and whenever I say dividend strategies, I mean two-legged strategies. Gone are the days of single buying. You can have strategies around dividends, corporate announcements. You can have strategies around economic calendar. You can have strategies around volatility. You can have strategies have, on the short selling side of it, but not naked ones, protected ones. You can have tons of strategies. There are about 10-15 strategies. You can have strategies on Nifty, Bank Nifty anomaly. You can have strategies on Bank Nifty and stock anomaly. Arbitrage is fast, so it is not easy. It needs computers and all to do that. So the point that I'm trying to make is either CE or PE. If you move from here to strategies, which means mixing both CE and PE in any combination, this will give you a lot of input. So India VIX is something that you'll start tracking, and you'll also start tracking, seeing the anomalies and see if you can make any strategies around that. There are a lot of strategies around it. So what are important things to look at? First of all, build the playground where the Nifty is going to play. So you've seen that between 18,700 and 18,400 for Monday. You have also understand on a practical basis that Nifty will reverse at a certain point in time. So either it may first fall and then may recover. Either it will go up, make a gap up, and then fall down. By 12:30, this will become very, very clear to you. So you can build your strategies around this. Then understand when to short Nifty using strategies, or when to buy these strategies. When to sell, when to buy. That is an important point, but which comes from this one, and having a good hold on the technical analysis. So these all you can use to make your strategies, and this gives money on a consistent basis, which I'm sure you'll definitely enjoy. So if you have any questions, very happy to answer this. So what we have looked at today is, we have looked at OI thing. We have also looked at how Nifty can possibly behave on Monday, which is between this 18,700 to 18,400 range. You'll also have to track the highs and lows of the day, of the previous day. Possibilities are it may fall down, possibility 1A. Second possibility, it falls and recovers. So this is possibility B. Third possibility is it goes here and crosses, which is 2A. And on a realistic basis, it may simply come down this one and 2B. If you see this consolidating between the band, you can go for strategies like short straddle, and rather the more popular one is iron condor on the short side of it, and short iron butterfly. These are two very popular with limited risk that you can also do with, say, 30,000-40,000, say 40K on around 40,000 rupees on Nifty, and you lose limited amount. You will not panic, and a lot of people are trying this out, so we've changed their trading behavior. So PCR ratio has any relevance? PCR ratio does have a relevance, but PCR also has become a trap. So use PCR. If PCR is increasing, that's a bullish sign. If PCR is going down, that's a bearish sign. If PCR is equal to 0.20, it's a support level. If you see a PCR of 3x, 4x, 5x, 10x, Nifty is super hot. So you can build your strategies, volatile strategies, like a bull put spread using a PCR number. Say it is, if it is anywhere between 0.102 to 0.20, you can try and see bull put spread. What is the impact of RSI? Track Nifty on 1 hour RSI, and it will give you fantabulous reversal results. Just check this out. RSI 1 hour, if it hits 30, you'll see amazing amount of reversals. Can we combine FII data with your OI data? Absolutely yes, because in that data, there are both FIIs and OIs sitting, and see where the FIs are, what FIIs have bought. So have they bought call, or have they sold it? This all data is available on various platforms. Have they bought put? Have they sold put? This will give you a lot of confidence to trade in the market. Right now, what is happening? They have, I think the exposure is on the bearish side of it. If I remember correctly, they have more puts than calls. So this data is available, and you must track this. And this is all options data, option OI data for FII. What about the change in OI? Arvindji, we just saw that change in OI, right? You just measured it. I said, see, this is the change in the OI right here. Check this one. I said, we spoke about it. So we also track these numbers. Important, say for example, which are the two biggest OI change percentage. So this also gives you the most active OI. Which is the most active OI? Comes from the OI change percentage. Okay. Any more questions? Can you see your webinar recording? We have to see 2-3 times. You can definitely. You'll have to ask the academy team. They will let you know. These you can ask to the academy. but I'm sure you found how to design strategies. So we teach that. I teach that. So so you'll have to get in touch with the academy. They will tell you how you can so you can always check how to design. So there are programs made around this which tells you there are 12 and 6, I think around 16 hours of training which involves and how to make strategies. So you can inquire with the academy. They will guide you through. People going to 18,450 means a bearish view. Yes, this is also people are keeping on a view on this one. Now, if it suppose it breaks this level, that means it is even getting more bearish. VWAP indicate after trade done, how would I know which direction make? Birbalji, this question is not clear to me. Position. Check VWAP and check OI. Mix that information. It has a lot of information in it. So, for example, last question I'll take up. See, look at this one. Look at this one, for example. So the Nifty is going up, but OI is going down. It means people are exiting. Do you really want to get into this trade and see what happens the next day? So you don't want to be in this. This is a trap. This is going down. Has the OI picked up? If the OI has not picked up, then you would not enter those trades. So you have to see the OI going up. So you have to read the OI. If you see the OI moving up, then it makes sense. So you can find days when the prices are going up and also the OI is moving up. Otherwise, you will not get it. So if you wait till say 12:30 types, as one part of one strategy, it does not mean that you will only do trades at 12:30. That is one of the trades. But do watch the OI data very carefully. You can maybe I can show you this on the. When will I cover the put option Greeks? This is a Greek, no? IVs was a Greek only, no? When we are talking about IVs, so if you check this one, see, for example, if you see here, I'm sure if you take the reading correctly, this OI is going up and the prices are moving up. This is a sign that you can look into.
Puratan Bharti sir, good evening. Vishal Patel this side. I am one of the course coordinator. Thank you so much for today's wonderful session. Like you talked about many good important topics, and I'm a non-trader, but I learned many good things today, which was important of OI, important of IVR, importance of IVP, and if OI is going up, what is the price, how is the price going down, how to trade, many things. Thank you so much for such a wonderful presentation and good explanation about this futures and options topic. And last but not the least, thank you so much audience and participants like for being here today. I really appreciate that you took the time out to be here and listen to Puratan Bharti sir's workshop. Thank you so much everyone. Our course coordinators will call you tomorrow for taking a feedback of this session and also informing you guys about the futures and options module, wherein Puratan Bharti sir will teach you more strategies and make you understand about how to trade in futures and options. Thank you so much. Thank you so much, sir.
Thank you. Thanks a lot. Thank you. Take care.